Right now, the crypto fear and greed index sits at 27, and Bitcoin is bleeding out well below $77,000. Yet, look right across the aisle. Claude Opus 4.7 just scored PhD-level reasoning on standard benchmarks, and autonomous agents are raising $500 million in days. Look at this board of market data. While retail panics, a specific token at the exact intersection of these two technologies is up 47%. 70 anonymous coders just trained a 72 billion parameter model without touching a single corporate server. Most people are caught up watching the daily ticker. They're missing that sophisticated capital is moving into position right now, quietly building a parallel digital architecture. These endless rows of physical servers represent the absolute ceiling for artificial intelligence. Every time an AI agent runs autonomously for 14 hours, it burns through massive amounts of compute. Amazon, Google, and Microsoft own the physical machines. Because they control the hardware, they dictate the prices, effectively locking the entire artificial intelligence industry into incredibly high rental contracts. To get around this, developers are constructing a parallel economy built on blockchain. They are aggregating processing power from thousands of independent machines worldwide to provide that exact same infrastructure at a fraction of the cost. This is where the real money is flowing. If you want to scale these massive learning models without running out of cash, you have to use this decentralized plumbing. The foundation of this system is the compute layer. Networks like Render allow anyone with a dormant graphics processing unit, a GPU, to sell their idle power directly to the studios and developers who need it. This is a network entirely backed by physical hardware. By connecting buyers directly to distributed machines, developers are accessing processing power at up to 85% below Amazon's standard web services rates. Industry forecasts show global chip demand rocketing to $1 trillion over the next 3 years. Every new model needs a piece of that silicon to function. Render doesn't rely on hype. It provides raw utility. As the overall demand for computation expands, the value of this distributed plumbing scales with it. Above the hardware sits the intelligence layer. Bittensor operates as a decentralized machine learning network, a marketplace where contributors are paid strictly for data quality. The network contains 128 active subnets. Each is a specialized arena where engineers compete to deliver the most accurate data. In March, coordinated entirely through Subnet 3, 70 people trained a 72 billion parameter model entirely through distributed machines, without central authority. NVIDIA's CEO, Jensen Huang, specifically highlighted this exact run on a recent broadcast, validating the idea that decentralized models can successfully operate alongside proprietary ones. Bitcoin proved you could turn electricity into digital scarcity. Bittensor is proving you can turn raw machine intelligence into a quantifiable, tradable asset. The final piece is the execution layer. When autonomous programs need to hire each other to complete complex, multi-hour tasks, networks like FET and NEAR provide the settlement rails so machines can transact without human input. But decentralized systems are messy. On April 10th, a major subnet operator dumped $10.2 million worth of Tau tokens over allegations that a single founder held too much control. Look at this chart mapping the immediate fallout. The network's valuation dropped 20% in a single trading session, exposing the inherent risk of a trustless system relying on centralized trust. The network didn't hire a crisis management team. Instead, it pushed a hard protocol upgrade called the conviction mechanism. It required participants to mathematically lock their tokens for years to earn voting rights, directly patching the vulnerability. A system that fixes its central points of failure through verifiable code rather than promises shows the actual operational resilience required to manage institutional wealth. Wall Street is already acting on this resilience. Grayscale and Bitwise filed for exchange-traded funds to bring traditional finance into decentralized machine learning. Fast forward 12 months. As tools like Claude and GPT run continuously as autonomous workers, these crypto protocols will graduate from speculative bets into utilities, generating hard revenue from actual enterprise usage. This chart projects the impact over 5 years. BlackRock anticipates up to $8 trillion in AI infrastructure spending by 2030. If even a fraction of that capital routes through decentralized compute layers, the valuation metrics completely detach from historical norms. During the broader market slide in the first quarter of 2026, AI-linked tokens drastically outperformed 90% of all other digital assets. The market is actively pricing in this migration. The tech sector is building software to make intelligence incredibly cheap and abundant. The blockchain sector is building the open, distributed hardware capable of sustaining it. They are not competing industries. While the retail public remains fixated on the fear gauge and the daily price drops, they are completely missing the silent merger of these two massive economies. While the crowd watches the price charts, the foundation of a decentralized, intelligent economy is being poured in the dark.